Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at FX and that euro currency making a big bounce here. Recall not too long ago we were talking about euro US cross at around 120. We got down to 115 after all this political mumbo jumbo risks going on in Italy and other countries there, and we've seen a bounce, retraced about half of that. Not quite, but almost. So we've seen a bit of a bounce here on some relief, but technically we're still within that range. We're out of the bear tone range, but we're not into a bull range yet. And if you look at the charts right now, we're just kind of struggling to get back to that midpoint. If we can hold a sustained trade there somewhere north of 117, then we can probably start to talk about building blocks for possibly getting back up to the highs. But right now that seems to be a bit of a long shot. Given resolution is not found, we've just basically calmed the waters a bit. And if you look at the dollar, same idea here. The dollar has seen a massive bid going back to early April. We've seen a trend line that is pretty well firm, and we broke that for the first time since that trend began back in early April. So right now we're seeing the dollar pull back. I won't necessarily say that we're chasing a bear market yet in dollars. Recall 2017, the year the dollar would like to forget. We aren't there yet. Right now what we're seeing is just a modest pullback. I think normalization is one of those reasons. Likewise, we have a lot of data and a Fed meeting next week. So there's certainly, or in 2 weeks, there's certainly a lot that's going on in the world right now. And I think that when you see big moves like we saw in the euro currency from 120 to 115, you tend to start to see other markets start to correlate that a little bit. I think that's what we're seeing right now in the dollar. So dollar weakness today, but I'm not saying that it's there for good. And last, let's talk about the reason, the catalyst for these moves, at least in the euro currency, is going to be Italy. Now, Italy did find some solace. They were able to put together some kind of political party, some kind of political group agreement, whatever you want to call it, to calm the waters, but it hasn't solved the problem yet. And right now, if you want to take a look at Italy leaving the EU is probably the furthest thing from anyone's radar, despite the fact that it keeps being talked about. Likewise, how their debt is going to be restructured, if at all. But essentially, we have a leadership now in place, or coming in place, that will at least give some kind of solace to the market that they can work through these problems. Reminds me of Greece not too long ago, and will remind us of Spain when that happens. But I think ultimately right now, Italy is going to be a second page story. It has been a front page story all week. And if you look at the volatility in the global markets, period, we've seen things spike high, not only in European bonds and equities, but U.S. equities, rates, everything has seen a massive shift due to the idea that tail risk is still out there. And the euro currency is just one piece of evidence that we have to keep that in mind, that despite central banks coming and going, raising rates and talking of raising rates, there is still massive amounts of risk out there that maybe aren't being identified. And while probabilities are small that they could come to fruition, probabilities are still probabilities. And I think that Italy is one of those that's been talked about like it'll never happen. But now we're finding out that it could happen, or at least the probabilities of it happening, of it trying to leave the EU, are higher than they were about a month ago. So I think that right now the fact that they were able to come to an agreement is positive. That's why we saw the bounce in the euro. That's why we saw the decline in the dollar. But I think ultimately from 50,000 feet, the problem is still there, and we haven't found any resolutions yet. So keep your finger near the safety on that one, because I think if you look at treasury yields continuing to decline, equities continuing to bounce around, there is still volatility, there is still risk in the market, and today's and yesterday's trade are maybe a modest breather, but certainly not the end of the road for the euro currency or Italy at this point. This is Todd Colvin coming to you from the floor of the CME Group.